Hi, this is Patrick Vernon from UNC Kenan-Flagler. In this VCIC training video, we will define venture capital. Many people think of venture capital as any investment in startups, but it actually has a very specific definition that includes three major components. Venture capital is institutional, private equity investments in high-growth startups. By institutional, we mean that VCs get their capital from institutions. VCs are professional money managers who have a legal obligation to maximize returns to their limited partners. For VCs to be able to invest in startups, they have to raise a fund, and they get that funding largely from university endowments, corporate foundations, pension funds, and any other entity that would like exposure to this asset class as a part of its portfolio. By contrast, angel investors, while also investing in startups, are not investing other people's money. Hence, when startups receive funding from a venture capital firm, it is called their first institutional round and brings with it a level of credibility associated with professional investors. Venture capital is a type of private equity investment. By equity, we mean ownership in the form of shares of stock. When VCs invest, they receive newly issued preferred shares of stock, representing a significant ownership stake in the startup. In an equity investment, there is no debt to be repaid. Rather, the proceeds will be split at the end between founders and VCs. The end is called an exit and refers to the sale of the startup, either to a larger company or by an IPO. This is also called a liquidity event and is very similar to, say, when your parents sell their house and recoup all of the equity they've built through the years. Now let's take a look at how these private equity investments differ from public stocks. Because VC transactions are private, nobody knows the details unless the private parties choose to disclose it in a press release. Compare that to public stocks, which trade day in and day out and have a market price. Public stocks are highly liquid, meaning you can convert them easily into cash. Private equity, on the other hand, is like a house. To liquidate private equity, you'd need to find a buyer and negotiate a price. Lastly, VCs will take an active role in managing the company. They will often have seats on the board of directors. These are several ways that private equity differs from public equity. However, venture capital is but a small subset of the entire $4 trillion private equity market. VC is definitely a part of PE, however, they have very different cultures. At one extreme is the California startup culture, and at the other extreme is Wall Street. The lines between VC and PE can get blurred as a startup goes through phases of funding. Airbnb, for example, raised a $1.5 billion Series E. The last thing I want to point out about VC equity investing is that VCs get special rights with their preferred shares. A few of those rights are listed here, and we'll come back to these in the third section of videos. Your VCIC team would be well served to pick up a copy of Venture Deals, co-written by VCIC enthusiast Jason Mendelson. Lastly, let's take a look at the kind of companies VCs are using other people's money to invest in. Like other investors, VCs build a portfolio of investments, in this case, startups. Whereas a traditional portfolio of investments might perform well across the board, VCs have a hits-driven philosophy. A top-performing VC fund is characterized by the hits, not by the failures. It is a different risk-reward paradigm in which every investment must have the potential to be a hit. The old cliché is hockey stick growth. VCs are looking for startups who can take a cash infusion and create exponential growth. The new cliché is unicorn. A unicorn is a startup that has grown to over $1 billion in valuation. Put it all together, and venture capitalists are professional money managers using someone else's money to hunt unicorns. In the next few videos, we'll take a look at the VC job cycle to see exactly how they do this.